Hey, welcome back to Accelerated Investor. This is Josh. I am so excited that you're back with me, and I'm excited to introduce part two of my interview with Daren Blomquist. In this second piece of the interview, we're going to specifically talk about the foreclosure inventory that is currently being suppressed by foreclosure moratoriums. We'll talk about where foreclosure inventory is slowly ramping back up. We'll be talking about banks clearing the decks of their foreclosure inventory to get ready for new foreclosures that are happening. We'll also talk a little bit about how confident investors are in their ability to buy and do fix and flips versus fix and rents, and some of the confidence that's happening in the marketplace. And finally, we'll discuss our projections for foreclosure inventory over the next 2 years. How does 2021 and 2022 and the opportunity to buy foreclosures, how does that compare to 2007 and 2008? So I hope you enjoy the second piece of our interview with Daren Blomquist, VP at auction.com. Take a listen.
Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you love entrepreneurship and investing in real estate, then you are in the right place. Josh is the CEO of Freeland Ventures Real Estate Private Equity and has personally invested in well over 500 properties all across the country. He's also made hundreds of private lender loans and owns over 1,000 units of apartments. Josh is an expert at raising private money for deals, and he prides himself on never having had a boss in his entire adult life. Josh and his team also mentor investors and entrepreneurs from all over the world. He doesn't dream about doing deals. He actually does them, and so do his listeners and students. Now sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So everybody, welcome back to Accelerated Investor. I am back with Daren Blomquist, VP of Market Economics at auction.com. We are here to continue our conversation. This is part two of our implications for investors, the now and not yet opportunities. So Daren, let's jump back in. The first part that we had of this interview, we discussed all the data in the market, all the metrics, the trends, home prices, home units, forbearance agreements. What we're going to talk about next is the actual opportunity for real estate investors. There's obviously thousands of investors that are on your platform at auction.com buying inventory. And so let's talk a little bit about what do we see on a go-forward basis? What are some opportunities right now? And what are some opportunities maybe not yet that are coming down the road? Tell us a little bit more about foreclosure inventory and what's going on there.
Sure. Yeah, and we actually have at least a couple million folks who are registered on auction.com using our platform. And so, yeah, it's a great, from a data perspective, it's a great place to look at in terms of a marketplace for distress. But what we're seeing on the supply side is that because of the foreclosure moratoriums, there's not a lot of supply of foreclosure auctions specifically. These are the auctions that occur on the courthouse steps. The red line is 2020, the gray line is 2019. Week by week, we saw week 13, which was mid-March. The heartbeat basically stopped in terms of those foreclosure auctions. Now, what's still happening that's exempt from the foreclosure moratoria are the vacant or abandoned foreclosure properties. And I think that was wise of policymakers to exempt those. Servicers were still nervous about foreclosing on even those early on, but we've started to slowly see them put those up on the auction block, which I think is a good thing for the market. You don't want those vacant and abandoned properties just sitting there in foreclosure limbo. So, but all that said, it's still a very small sliver of the inventory that we were seeing available at those auctions a year ago. About 16% of the inventory a year ago is available today in terms of those sales.
Wow. 16%. Wow. It's really amazing what the market's done. That just jumps out at me as such a big drop, only 16%. So if there were 100 properties going to auction a year ago, there's only 16 today. It's interesting. Mm-hmm. I was talking to my friend who's also in commercial real estate, specifically apartments, and he said there was an 82% drop in the number of transactions. So very similar number in that if a year ago there were 100 apartments that traded and sold, today there were only about 18 that sold. So the number of apartments, changing hands is way down. The number of properties at auction is way down. And my buddy used the term sort of pencils down, where a lot of people had just taken a break from the market to kind of see how things flushed out. But it's obviously creating now, it's going to create over the next maybe year or two a tremendous amount of pent up opportunity. This stuff has to work its way through the system eventually.
Yeah, this is the kind of normal state of foreclosures before the pandemic is the gray line. 2019, that was pre-pandemic. You still have, even on just our platform, about 1,500 properties a week that are being brought to auction, and that's about 50% of the total volume nationwide. So yeah, assuming that most of those are not going into forbearance, which the numbers bear out, those are just a backlog that's eventually going to hit when the moratoriums are lifted. And so that's the not yet opportunity. The now opportunity is there are still some of these happening. Some people think foreclosure moratorium, no foreclosures happening. There are these vacant and abandoned ones, which are typically the most appealing to investors as well. Wow. And the next slide shows by state where we see some of it coming back faster than others. So orange is where we see the foreclosure inventory returning a little bit faster. Blue is where it's not returning very fast there relative to the pre-pandemic levels.
Yeah. South Dakota looks like they're hustling 50%.
Yeah, a little bit of the law of the low numbers there. One state that surprised me was California, that we are seeing a little bit of a pickup in California, but whereas Florida, we're back, we're basically at zero foreclosure auctions relative to the pre-pandemic numbers.
Gotcha. Daren, I did want to back up to the previous slide real quick and just clarify something that was on my mind. You said that of all the foreclosure sales in the country, auction.com represents roughly 50%. That's a huge percentage. And if you guys are typically selling 1,500 a week, that obviously equates to about 3,000 roughly, 3,100 total foreclosure sales per week in the country. So first of all, I didn't realize that auction.com had such a huge market share. It's amazing. I didn't realize you guys had millions of users. That's amazing. But it also puts in a very real perspective, a very real number to know that there's about 3,000 auctions a week of foreclosures, which is about
so you get to 12,000 a year, or 12,000 a month, which then adds up to close to 150,000 a year.
People keep asking me, and that's even in a good market, in a really strong economy. They're like, oh, the foreclosures are dead. There's no foreclosures. Well, what I just heard you say was there's about 140 to 150,000 a year, even in a normal good economy like we've had for the last 5 or 8 years. Yep,
absolutely. And so we see the strongest demand in a good economy because people are wanting to find those deals. But just to clarify, the 150,000 number we're talking about, that includes both properties that sell to investors and the ones that go back to the banks. So those two sides of the coin, but they're both, we consider both are completed foreclosures. Either the person loses their home to it being bought by an investor, or it goes back to the bank.
Sure.
And it's about, the sales rate on our platform is about 40 to 50% of the properties sell to investors. Nationwide, it's a lower sales rate, more like 20 to 30%. But to give you some clarification there.
And we just heard numbers from the banks. We heard a number, I think it was about 2 months ago, Daren. It was something like $29 billion was set aside on banks' balance sheets to get ready for upcoming foreclosures. And obviously your slide here, banks are clearing the decks for coming distress. So tell us about this.
Yeah, I'm glad you brought that up. That's something I don't have in here, but that's a headline I took note of, that the banks themselves are, realize that as the short term may look good, but in the long term, there's going to be this distress that's likely to be hitting their balance sheets. So they're preparing for that. Another way that they're preparing for it is selling the properties they already own, which are the ones that have already been foreclosed, the REOs, So we do see evidence of this on their platform. Those are still selling on our platform. And those are the most accessible to investors because they're online auctions. You don't have to go physically to the location, and you can bid from anywhere in the country. So those are very appealing given the pandemic and the ability to invest remotely. But we see the banks continuing to sell those, and this V shape you see is the percent of those with multiple competing bidders on the orange line. It indicates, while supply is down and overall distress, there's a lot of still strong demand from investors who are buying. And this quote I have is from one of the larger, most of our investors are small investors, but we do have some larger investors on our platform. And this particular one buys 1,500 to 2,000 properties a year. So it's pretty big.
Wow.
But from their bidding, so they're going in there bidding, they know the platform very well and they know how the banks are responding. And his comment was just on the way that the banks are responding to bids, it looks like they're trying to make room on the balance sheets and are motivated to sell.
In my newest real estate investing book, The Flip System, you'll learn the proven secrets and strategies that I've used to be a successful real estate investor. You'll also hear the story of my journey from quitting my job to doing over 2,000 units of apartments. The Flip System is now available for a limited time, and you can grab your free copy at getflipsystem.com/podcast. You'll learn the same proven principles and secrets and investing strategies that I used to quit my job and pursue a life of financial freedom. In this book, I'm sharing exactly how I was able to personally close over 750 profitable real estate deals, make over 400 private lender loans, raise over $30 million, and acquire over 2,000 units of cash flowing apartments. Get my newest book now for free at getflipsystem.com/podcast. That's getflipsystem.com/podcast.
That's good news. I mean, if you're more of a mom and pop investor, one of our students, maybe you do, 10 to 50 deals a year, auction.com becomes a real opportunity because you have a massive institutional investor saying, look, looks like they're willing to deal, maybe sell a little bit lower, a little bit looser on the price in order to clear their balance sheet to get ready for future coming distress, stuff that might be coming in a year from now, indicates some opportunity to buy properties at maybe a slightly lower price. That's great stuff. So below retail opportunities, that's what all of our investors want to hear is what can I get that's off market, below retail, that already has some built-in equity? Tell us what we're looking at here.
Yeah, so just to hit home the point you just made is that even though there is limited supply and strong demand for these distressed properties, they are still selling well below the retail market. And so the retail market is just non-distressed sales there on the left that I pulled from public record data. This is average price, so it's the NAR puts out median price. That's why this looks quite a bit higher. But I just wanted to compare apples to apples. Average price there, $385,000 for a non-distressed. I excluded all distressed sales there. Whereas with the properties specifically that are selling as REOs, auctions on our platform, they're selling at $133,000 on average, $81 a square foot. Similarly, the foreclosure auctions, which I mentioned earlier, also selling at $81 a square foot, slightly lower average sales price there. But this is just the point that there are opportunities now, even though they're somewhat limited because of the foreclosure moratoriums.
Got it.
And we did a quick analysis of, if you bought a property at the average sales price in each of these counties across the country, it's not obviously every single county, but we looked at a few hundred counties with a lot of volume. And you turn around and held that property as a rental using the fair market rents in those areas, what would be your potential returns? And this is another one of those interactive maps that I think your listeners and viewers would love to look at for their area, because you can see the specific details on if you bought a property at foreclosure auction, or actually this is specifically the online REO auction, what would be the average sales price in your market, and what's the average fair market rent? And the green is the better returns. And not surprisingly, a lot of the green, the dark green, is in the Midwest, in the Rust Belt, in your neck of the woods. A lot of the blue, which is not as good potential returns, is in the coasts, in a higher price markets there for the single family rental market specifically. And I would say the single family rental market, based on what we saw earlier with when we talked about in the last episode, the demographics, people are moving away from the coast, away from these areas that are blue and more toward the green. And people want single family homes because the pandemic has accelerated that desire for living in a single family suburban type of situation.
Yeah. Based on all this data, which is phenomenal. Again, I appreciate you coming back to share once again, because this gives me with these massive takeaways. And I've been telling our members for a long time, you don't want to be in a boom bust market. So remove the pandemic for a minute. We talked about potentially being at the high point of an economy. Economy can't continue to grow forever. And you want to be in places, what we call price stable markets, where you can get a good gross rental yield. And to look at this, you see price stable markets, which is typically the Southeast, the Midwest, and potentially the middle part of the country. That's where we have a lot of our apartments. That's where we did a lot of lending on our private lending platform. And this proves, again, price stable market, not along the coastlines. And then the gross rental yields, a lot you see in the industrial Midwest and some in the Southeast, places where you can get good rental yield. And it's not a boom bust market. Now, Florida is definitely a boom bust market. Even parts of southern Texas are boom bust markets, like Houston, for sure. And New York, New Jersey are boom bust markets. And of course, on the West Coast, California, Oregon, Nevada, Vegas, Arizona are some boom bust markets. So this is just another piece of data that tells me that we continue to the numbers don't lie. If we invest in areas that are price stable, that have a good gross rental yield, and you invest for the long haul, don't worry about the ups and downs of the market. We're not playing the market for momentum. We're not playing the market to kind of hit it at the right spot. We're buying for the long haul, buying price stable markets, buying the industrial Midwest and the Southeast, and you'll get a good price and price stable and a good gross rental yield. It just continues to prove what we teach. And it's part of why we teach, is because the numbers tell us what to do. So we love that. Tell us about new investors, right? Newer investors versus more seasoned investors versus fix and flip versus people buying to hold. What are some of the different things that you're seeing on your platform, and how's the COVID, the pandemic, impacted them?
In general, we're showing that we surveyed our investors after the pandemic in April. Now, this was still when the shock, that pencils down time you referred to. A lot of investors put their pencils down and said, hey, we don't want to do too much until we figure out what's going on here. So with that caveat, though, in general, what we saw is the hold for rent investors, folks who are holding this more for the long-term investment as opposed to a quick flip, were more confident that they were going to keep acquiring properties at the same rate or even more properties than they had in 2019. And the smaller volume investors who are less exposed to a market downturn were more confident as well. 55% of them said they plan to keep the same or increase their purchases. And then REO auction buyers, and that's partially because there's more inventory with the REO auctions as opposed to the foreclosure auctions. And so on the flip side, pun not intended, the fix and flip investors, people who said they were mostly fix and flip, were a little bit less confident. The majority of them said they plan to decrease their property acquisitions. And the majority of bigger investors, 20 plus, said they plan to decrease as well. And I think, you probably know this better than I, but both of those groups have a little bit more risk if there's a downturn in the market. If prices went down and you have 30 properties out there that you're flipping as opposed to just one rental that you're buying, you're a lot more exposed to that type of a downturn.
No question. No question. So all this data proves that there's going to be some backlog of foreclosures, some more forbearances that don't work out. And we're looking at, okay, again, that small example of New York, New Jersey, hurricane, how did that work out a year or two from now? And we could start to see some numbers, some projections of what this is going to look like in 21 and 2022. What does it look like from your perspective?
Yeah, so these are some, I would call these kind of back of the, a little bit more than back of the napkin numbers for sure. We've put a lot of thought into this, but I don't want to claim to have a crystal ball here, but we do have a lot of good data here. And looking at those, what will the volume look like when it finally hits of these delayed foreclosures? And so if you combine that what I call BAU foreclosure backlog, business as usual foreclosures that were happening before the pandemic, I put it at 12,000 a month. It could be even more than that. We talked about that. And then on top of that, then you have the forbearance volume, which right now it had hit as high as about 5 million people who are in forbearance. It's come down a little bit, but if you look at anybody who was ever in forbearance, it was over 5 million. And if you assume 20% of those folks, at the end of forbearance, they have to go into some type of loan modification because they can't just pick back up on payments right away. And we have some data to support that. So that's one of the assumptions. And then we have a redefault rate, which is based on the redefault rate we saw during the last major loan modification program during the last recession, which was the HAMP program. About 24% of those redefaulted within 2 years, 45% redefaulted within 5 years. So you throw all those numbers together and so I'm not actually even going out more than 2 years here, but that 2-year tally is about 636,000 over a 2-year period. And then we ran another regression model that was a little more sophisticated, and we came up with between 575 and 625,000 in that 2-year period. So on the little bit lower side, but still in the same ballpark of that. And actually that model does point to, after 2022, a much steeper ramp up in foreclosures. So that, and then to put it in context, and this does parallel with what you've said, I think, that there's going to be an event here. There's going to be an uptick in distress, but at least over the next 2 years, it's not going to be, it's going to pale in comparison to the Great Recession. During 2007 and 2008, there were 1.5 million completed foreclosures, and we're saying 600,000 and change. So less than half of the volume that we saw in 2007, 2008. Now, both in the case of 2007 and 8 and here, we think going out the next year and beyond, there will be even more foreclosure volume like there was in 2009 and 2010. But this is just to put some things in perspective over the next couple of years. Again, it's not a crystal ball, but it's helpful to just put some numbers down and say, here's what it's going to look like.
Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com/podcast.
Well, by comparison, it's roughly 35% based on the model that you did here, comparing the next 2 years to what we saw in 2007, 2008. And there was obviously still a lot of foreclosures that rolled in 09, 010. And that was what everybody referred to as, a one-time lifetime event. I've been telling our audience for a long time, there's going to be more foreclosures. It's not going to be 2007, 8, 9 again. And from the initial knee-jerk reaction of this data, which is fantastic, looks like it's going to be about 35 to 40% of what that massive foreclosure event looked like. And we'll see. We'll see based on unemployment, people getting back to work, this election season, lots of different factors. It's nice to see this time around, though, Daren, I think you'd agree, that back in 2007, 8, 9, we were really flying blind. This data was not something that companies like yours or you aggregated aggressively on a weekly basis. Now we have companies and, led by you and really kind of leading the charge for auction.com to pull this together and share it. And I think we'll be much more equipped to deal with it, both on a political level, a government level, and an investor level, to identify where's the risk and where's the opportunity. So really, really phenomenal stuff. Last slide, just can compare here Ohio, New Jersey, an overall foreclosure comparison from 2010, and a little bit more about the foreclosure moratorium. So just kind of explain this, kind of bring this to a final conversation here.
Yeah, this gets a little bit more philosophical here in terms of, and I think I mentioned this earlier, but what we're trying to advocate with our servicers and with the policymakers who we interact with is that this forbearance, what we've learned from both 2008 and then 2017 was when the hurricane season was really bad. Combine those two crises, which are very different, but what we found works is it's proactive forbearance. What does not work as well as a blanket foreclosure moratorium. And this is just showing that in the last recession. You have two judicial states where the foreclosure process takes longer. Both Ohio and New Jersey have judicial foreclosures, but they behave very differently during the crisis. And one of the main reasons is, we believe, is there was this blanket foreclosure moratorium that applied to almost all foreclosures in New Jersey that took about a year, basically no foreclosures happening. Well, not no foreclosures, but very few foreclosures. And you see that helped the New Jersey market in the short term. The foreclosure activity dropped dramatically in 2011, whereas Ohio kind of kept trending higher. But then you see in the aftermath, there's this long tail, more than a tail, upward increase in New Jersey foreclosures, whereas Ohio had this long decrease. And on the right-hand side, you see home prices in Ohio have recovered much more strongly than in New Jersey. And not all of this ties to the moratorium, but I think a lot of it does. And so this I think is a point we're trying to make to servicers and policymakers, but also it matters to investors what's happening in your state. If there is kind of this more aggressive foreclosure moratorium situation, you may not have as much opportunity in the short term, but probably you're going to have more opportunity in the long term in those types of states. And another argument just that we're making too with the servicers is certainly you want to prevent the foreclosures that are unnecessary and preventable. But for the ones that are going through, the best avenue is to sell that to a local, especially a local investor, who will get that back into the retail market faster than you can. Some of these banks do think that maybe they can hold on to the properties and rehab them themselves. And our data shows that it's better in most cases to sell those to an investor. It typically gets back into the retail market and rehab faster than the other route.
Yeah, phenomenal stuff. I mean, I remember when we first started doing private lending on more of a nationwide level, I had some friends of mine that said, I will absolutely not make a private lender loan in New Jersey. The foreclosure process takes 1,000 days. And this is actually the data that shows why. You had a whole year of foreclosures that didn't happen, that eventually has to get caught up. If you don't have the budget to add more staff, to add more judges, more prosecutors, more processing staff to do that, which most cities or municipalities are not going to just increase their budget to process more foreclosures. Naturally, it's just going to take longer, and that's what happened in New Jersey. So really, really good stuff, Daren. Listen, we're going to make this recording available. It'll be on iTunes, YouTube. We'll put those links to the interactive maps in the show notes as well as the emails. Is there any kind of final thoughts or ideas or parting shots or anything that you'd like to promote for our members to go onto your platform at auction.com?
Sure. Yeah. I mean, I just love to say a lot of this research I'm doing is on our website at auction.com/in the news is the best place to find this. A lot of these heat maps and others that you can go in and interact with. And then certainly just not to ignore the opportunity to promote the fact that if you are interested in looking at properties that are available on our platform, we're selling especially a lot of those online REO auctions right now. Go on and there's no registration fee or anything like that. It's free to look and to browse and bid and all of that. Of course, if you bid and you're the winning bidder, you have to pay. But just check it out. And I think some investors might be surprised to see the opportunities that are available.
Phenomenal stuff, Daren. Thank you so much for joining us again at Accelerated Investor. We appreciate you.
Thank you so much. Good to be here.
So guys, there you have it. I hope you enjoyed this interview with Daren Blomquist. I think the important piece is where Daren and I really discuss the foreclosure tide that's finally rolling in. It's been an amazing market for the last 5 to 6 to 8 years. And based on Daren's projections, we're seeing this backlog of foreclosure inventory of between 575,000 to 625,000 foreclosures are going to be happening over the next 2 years. Compared to 2007, 2008 of 1.5 million foreclosures, it's about 35 to 40% of the opportunity from 2007, 2008. So here's what I would recommend. First of all, sell all of the fix and flips that you have now. Fix them up, sell them, get rid of them while inventory is low. Secondly, be ready to buy, keep a bunch of dry powder, keep a bunch of private money ready and free and able to pounce on opportunities in 2021 and 2022. I do think that there's still going to be a lack of supply, even with all these foreclosures coming. So there's going to be an opportunity to buy a lot of foreclosures. They're going to happen all over the country, not just in specific areas. So be ready for that opportunity coming in the next 24 months or less. And also, again, if you're a cash flow investor like me, be ready to buy those at a discount and hold them forever. I appreciate all of you engaging with us on Accelerated Investor. Please leave us a 5-star rating and a review of my interviews with Daren. Also share this on all the social media platforms. And if you do, we'll send you a free t-shirt. Just send us a quick screenshot of your 5-star review and your rating, and we'll send you an Accelerated Investor t-shirt. Also, don't forget to enroll in our free Facebook group. Find Accelerated Investor on Facebook. You can join the group absolutely free. And there, I'll answer your questions live inside of our live interactive private Facebook group for all of our free Accelerated Investor members. Thank you so much for joining me today, and we'll talk to you soon. Take care.
Hey, Josh here, and do you want to win a free Accelerated Investor t-shirt? All you have to do is give Accelerated Investor, our podcast, Accelerated Investor, a rating and a review on iTunes, okay? Do that now. Then send us a screenshot on Facebook or Instagram or Twitter. What we're going to do then is every week we're going to pick our favorite rating and review, and we're going to send that person a free t-shirt and maybe, again, some other cool, fun stuff as well from Accelerated Investors. So, again, don't forget to take a screenshot. Leave a rating, review, take a screenshot, send it to us so we know exactly who you are. And then once a week, every week on the podcast, we will announce a new winner. Don't forget to take a screenshot and send it to us so we know exactly who you are. We'll announce a new winner every week.
You've been listening to Josh Cantwell and the Accelerated Investor Podcast. Leave a comment on our iTunes channel and let us know what you want to learn next or who you'd like Josh to interview. While you're there, give us a 5-star rating and make sure to subscribe so you can be the first to hear new episodes. Follow Josh Cantwell and his companies, Strategic Real Estate Coach and Freeland Ventures, on all social media platforms now, and stay up to date on new training and investment opportunities. To start your journey toward the lifestyle you've always dreamed of, apply for coaching at joshcantwellcoaching.com.